you put your phone next to it, and then you use this the magnet, and it totally blocks it out 100%. You go, holy cow.
Yeah, I want to get that. I should probably get one of those.
She should be up at 10 to 7. You got 50 minutes. Hey, Jake, you want any wine or beer or water?
I'll take some wine.
Yeah.
Some wine?
Yeah. I think you guys are good to go.
Good. You can pick up everything on these things.
You can hear everything, right?
Yeah.
Cool.
Hey, Susan, I can hear you back there.
Well, you're live. So I'm just
We're on. We're on.
We're up and on?
to everyone.
Yeah.
Yeah. Okay.
And,
Well, let's.
here, it's actually better if you watch it from here. Here you go.
Technology in action.
If you want to turn it down, you can, of course, turn it down and up if you want.
Learning how to do all sorts of new things here, you know. Oh, that's mute. Turn that down just a little bit. Are we on like a major delay here?
20 seconds, yeah. Are you hearing something? What are you hearing, feedback?
Hearing myself talk 20 seconds later.
Okay, here's what's going on. Boom, fixed. My bad. Go ahead.
Gotta hire
Okay.
good helps.
You know, how you do this stuff, whatever, I have no idea. So we got AJ. Thank goodness. So, Luann, welcome to the
God.
Owner Finance Network.
Thank you.
You know, we were looking forward to having you here in the office. Usually it'd be the three of us, you, myself, and Susan Tierney, getting a chance just to chit chat about all the fun things you do. So I heard you had a little run-in with the ice.
Little bit of a close encounter with some black ice. Yep, sure did. Out walking my dog, broke my leg. So
Hey, AJ,
More technology. Hold on. 1 second.
hang on a minute. Look at this, my waitress.
hi. Oh, I want some.
Hi. Oh, we'll toast to you. Here's for you.
Oh, you're gonna hear my puppy. Momo. The
I
reason
hear
for
her
the
fine.
walk.
Okay. Good luck.
Just making sure I don't get any feedback again.
50 minutes.
Good Lord, are we done yet? Hope everybody forgives us for the technology blurps. So let's start off again, Luann. So guys, this is Luann Blah, is that right?
Blow, like a plow with the B. Yes.
I could handle that, you know. I need that kind of soliloquy to understand things.
I can do
So
that.
before I get going, what's the name of your company?
Exchange Resource Group LLC out of Denver.
Fantastic. I got it. So I was saying just before we got started with all this and all the feedback going on and whatnot, that really messes you up, by the way. And I have to admit, this is the first time I have ever had earbuds like this.
And I don't have
At
any,
least-
so.
Yeah,
So you're
that's why
ahead
you
of
don't
me.
have. That's why you don't have all the problems out there. But I hear that you had a run-in with either the ice or a Yeti or something, and you kind of bit the dust. Is that right?
I totally bit the dust and had to be rescued and had 29 hours in the ER at Plano Presby and then had surgery on my leg. I was competing with Susan for who could mess up their leg the best.
Well, Susan's messed up her leg, her shoulder, her arm. I won't talk about anything above the shoulder. I get shot if I go that far, so I can't do that. So no problem. But you broke your leg, is that right?
3 bones in my ankle and the big bone in my leg.
Oh my gosh.
Yeah.
How long
it's
till
been
recovery?
Well, tomorrow's kind of an important day. We'll see if they can take off some of this big heavy brace and put it in a boot. Gonna kind of
Good.
depend on, so 6 to 12 weeks with no weight bearing and then 3 months.
I got to tell you that no, the other day, even at my house, my whole front porch, which is a pretty good sized front porch, was solid ice. But as it melted and refroze again, it got, I mean, as slick as glass. And
That's
even with
probably
rubber
what
so-
happened. Yeah, it's
Yeah,
probably
even
what that
rubber
day.
soled shoes, you were slipping and sliding everywhere. It was like, oh my gosh.
And
I
I would
get
have
it.
come to Garland if we hadn't been able to figure this out. I had somebody willing to drive me to Garland just for you, Scott.
Well, that would have been, you could have visited, as we say, the land of Gar over here, right?
I could have.
Anyway, I just have a fun thing here a bit because I'm a football fan. And I know your son is a little bit of a football player.
Just a little bit.
Tell us who he is, just for everybody.
His name, he is my youngest son of 3, and his name is David Blau. And he's a quarterback, currently a restricted free agent with the Arizona Cardinals, started the last 2 games for them. Was with the Vikings this year, and before that he was 3 years with the Detroit Lions, played 4 years at Purdue.
That is awesome. I'm jealous. You know, he's just a lot better athlete than I am probably. Does he still like it?
Oh, he does. Oh yeah, it's in his blood. It's in
That's
his
cool.
blood.
You
His
know, I
agent,
wouldn't-
his agent texted me after my fall and said, well, at least you're not trying to get any football games. You timed it right. So
You know, I could be a backup quarterback, get paid all that money just to work out, travel, have a good time, and not get my rear end kicked all the time. So
until
might
you
have the-
start, after he was with the Cardinals for 16 days, *𝐾𝐲 got a concussion and he had to start the last 2 games. So
you know, we Aggies don't talk about Colt McCoy too much, okay?
my oldest son and his wife are Aggies, so we're good.
That's good. I got it. So all fun stuff. Hope your leg gets better, young lady.
Thank you.
But I know your company's a 1031. So what I just want to know is, how did you get into that industry? What did you do before the 1031 business?
I had a mobile notary company
Really?
since 1991. It was just me.
Yeah.
And I ran around Dallas closing loans. And then when David got recruited to play football at Purdue, it dawned on me that I needed something that I could do to make money that I could do when I was in Indiana and not in Texas. So long story around, answered prayer. Friend of mine knew the people in Denver, and they called me and we interviewed, and I started absolutely knowing nothing over 9 years ago.
Well, that's how you learn this business, though, from the ground up, which is what makes you good today when you do those kind of things.
Right.
So, no, that's awesome. And you never start up here. You always start down here, right?
It was a fake it till you make it.
Yeah. And isn't that true?
Oh,
I
it
could
is.
tell you so many stories going back from when I got laid off my first job when I was 24 years old. And of course, we're in the middle of a real estate crash. And I need to keep that in mind, because I tell people that all the time. And because I could talk the game and fake it so well, I was able to maintain things and keep things going. And how I did the things I did, I have no idea. But excellent,
totally appreciate that.
excellent description of it, 'cause that's what really it is. So mobile notary, you're in this business for 9 years now, which is 1031. You know, you get into, I find in the real estate industry, we have a lingo all to ourselves, right?
Right.
What are some of I have no doubt in the tax-free exchange business, a 1031 business, as they kind of call it, that it has its own lingo too. What are some of the buzzwords you have to understand and know?
First off, tax-free is a big but on the buzz, it's a tax-deferred exchange.
Wait. Are you saying there's no freebie out there in life, supposedly?
There is only a freebie with the 1031 exchange if you keep on going until you leave this earth and you pass your real estate on to your heirs and they inherit it at a stepped-up basis, and then it becomes a freebie. Then you're not here to enjoy it, but your kids are.
Yeah, that's no fun. We want to enjoy it, right?
Right. So you just keep on going. You just keep on going and increasing your portfolio and avoid paying the government and enjoy your passive income. And then when you're gone, your kids say, thanks, Dad or Mom.
Yeah. They say thanks, but you never hear them say that, though, do you? at
I
that
don't
point in
know.
time?
I guess we'll find out someday.
Wow, I get it. I get it. So I know that there's a lot of things you have to keep up with too with the IRS. Is that right? With IRS regulations?
Yeah, they haven't changed a whole lot and for the exchange and since late 80s, 1980s. The only thing that changed that Trump had to compromise with Congress in 2018. You used to be able to do exchanges on fun things like livestock and musical instruments and art and airplanes and yachts. It was very restrictive, personal property. But then in 2018, that went away. So now it is real estate for real estate. And back to the buzzword, like kind, is a very misunderstood term.
Okay. So before we jump off that ledge, because I want to talk about that, because I think that's really one of the most important things for everybody to listen to and understand. So first off, for everyone listening, tell us in your words, what is a 1031 exchange?
Okay. 1031 exchange, number one, has been around for 102 years. It started with ranchers swapping property around the fire, and then eventually the government got involved. So we have rules. When you own an investment property and you get ready to sell it and it has gone up in value, you're going to be federally taxed about 20% of any capital gains you have on that property. And 25%.
And by the way, if Washington has their way, that may go way up too, right?
Yeah, I've heard that. We hear that all the time. Well, and we're in Texas, so we're lucky because we don't have a state tax. Our friends in California have a 13.3% state tax added onto that 20% federal tax.
I am ready to move tomorrow.
Yeah.
Not.
No, you're in the land of Gar. You got to stay where you are.
You bet.
So the 1031 exchange is a way to defer that tax. And instead of paying it to the government, you can reinvest that amount and purchase more real estate. And it is part of the IRS tax code.
Well, I think we should let them get more money so they can spend more $400,000 missiles shooting down unknown objects and whatnot. Anyway, I won't go there. I'll get on a soapbox that we don't need to get on. So it is a way to defer your income tax, whatever that might be.
Capital gains tax, not income tax, capital gains.
Yeah, capital gains. So on an investment, you pay cap gains, whether it's 15, 20, or something else %, which, by the way, can be a lot of money.
Can be a lot of money.
Can be a lot of money. And
plus
you
the depreciation. Yeah, and then you get depreciation recapture. So you have to total that up, and then they want 25% of that.
Okay, so you made a comment earlier about a like-kind exchange, and that's really the buzzword for what a 1031 is. Now, I am well-versed when you say, I'm gonna ask you some questions. So like-kind, single-family residential for single-family residential?
No.
Or is it any kind of real estate?
Anything defined as real estate for anything defined as real estate in any state in the country, Guam and the U.S. Virgin Islands. And the reason the U.S. Virgin Islands are in there is because of a senator named Charlie Rangel from New York. Back in the 70s, had a boatload of property in the U.S. Virgin Islands, so he wrangled that.
Maybe we need to go to the Virgin Islands and give that a shot. So we can do down there. It'd be fun.
There you go. When my leg gets better, please.
When your leg gets better.
Yes.
So real estate for real estate, residential, commercial, land, for anything else, doesn't matter. So you got that. You made a comment though, and I did not know this. Are you saying you can do like kind on personal property? You made the comment like yacht?
Not anymore.
So, not anymore. So it's only real estate.
It's only real estate. You have to buy the real estate.
So I got to ask this question too. I know we talked about this earlier a little bit, because I deal a lot in mortgages, where I buy and or sell mortgages as well.
Right.
But a mortgage, although it's a lien on real estate, it's not real estate, is it?
No.
So that's You can't do that either.
No,
So, so if you own a rental property, you can sell it and buy another rental property and defer the tax gains. If you own a
Right.
commercial building, same thing, or land, same thing. Got
even
it.
oil and gas in Texas, oil and gas mineral rights are real estate.
So that's okay. So that's a definition. So if you own the mineral rights, or whatever it might be, you can sell those and buy anything else as well.
Mhm.
Awesome. That is, by the way, I did not know that either.
And
I
in
did not know that.
Colorado, water rights are considered real estate. In
me tell you what.
Utah gold mineral rights are real estate.
Wow.
Yeah,
You know, water might be as much as gold one day soon. Who knows?
it could be.
It could
It could
be
be.
one of those kind of things out there. So, I think it's so important for the investor to understand the 1031 mechanism. Everybody thinks they know a little bit. For instance, I knew at some point in time you could do other things. I didn't know they had put the kibosh on that, and we can't do it any longer. So it's real estate only. I'd been of the opinion for a long time it was like residential, commercial, and it's not at all. It's land for land, real estate for real estate, whatever they define as real estate. And I'm sure that
Correct.
is that under the IRS code they define that, I guess.
Mhm.
That
Yeah,
is?
it's in the IRS code 1031, funny enough.
Okay, so let's just use an example because I think people learn from examples better than anything else out there. So let's assume that I bought a home, and let me backtrack one more time. I think I heard you say this: investment property,
Correct.
not your homestead.
No, but there is a way to combine with the homestead, which we can go on at the end if we get a little bit, that's a little bit.
That'd be fun. By the way, there are
Yeah.
other things that you can sell if you sell your homestead and you buy another homestead. The gains are deferred anyway, so long as there's certain rules you meet with that along the way.
The section 121 part of the code is what takes care of that with your homestead. If you've lived in your home 2 of the past 5 years as your homestead, then as a single person, you don't have to pay tax on the first 250. As a married couple, you don't have to pay tax on the first 500,000.
Okay.
So
If
you
you
don't
buy
really.
another,
Go ahead.
that's based on your basis. So in other words,
Correct.
if you bought a house, for example, for 600,000, you sell it for $1 million, your profit or your gain is 400,000. So if
Correct.
you're married, you don't pay tax on that because you have a 500,000. So what if
Correct.
you take that? Can you put that into another homestead without being
Oh, yeah.
taxed on it?
Yeah.
Okay. It's
Yeah.
only if you don't take that money and put it into their homestead, do those tax provisions apply.
That's a little bit out of my wheelhouse. That's more of a CPA with the homestead.
I got it. Good point also. Stick to your lane, baby, right?
Stick to my lane, baby.
Yep, I understand completely. So I think that's important for everybody to understand, though, that you can buy, if you have a homestead, you can sell it. So long as you buy another homestead, it's not taxable. But if you don't buy another home after a certain time frame, then the proceeds do become taxable, subject to the scenario you just laid out. So with a 1031, though, so let's assume for a minute, I'm going to use that same example. I bought a property, maybe I'm using it as an Airbnb, let's say, and I bought it for $600,000 5 years ago, and I've been leasing it out in some format. And today it's worth $1 million.
Okay.
So if I want to sell that property, maybe I net $350,000 on the sale. So as an investment property, if I don't do anything, I could be taxed 20% of $350,000 or $70,000.
Why are you saying net 350 if it's selling for $1 million?
Closing costs and fees.
Okay. Not
Maybe
lender.
I pay a realtor. Yeah, not lender.
Okay.
Just close fees that you can write off.
Correct.
So I know that probably confuses people. That's how my little brain thinks automatically. So here we have that money. If I wanted to find a way to defer the tax on that 350, what would I do? What's step 1, step 2, step 3? Walk us through that for a moment.
Step one is you would call me.
That's
And we would,
good start.
step one would be you'd call your CPA. And you would say, look, I'm thinking about selling this investment property. What would my tax hit and my depreciation recapture be if I don't do a 1031 exchange?
Yeah, and by the way, you got to think about that. If you've been depreciating your property in some format,
That's
you get the privilege of capturing that and paying tax on all that.
25% federal.
Yeah.
Yeah, that's across the board.
Yep.
So then you would call me and you would say, walk me through the 1031 exchange. And I would. Do you want me to go through the 7 rules real quick now, Scott, or how do you
We
want to-
can, but what's the first thing you got to do? I mean, if I sell my house, what's the first thing I got to be thinking about?
Calling me before you close.
Mm-hmm.
You cannot set up a 1031 exchange after you close and the money hits your account.
Yeah. Oh,
So-
yeah, too late then. You can't go backwards.
No, and you would be shocked how many people call after and say, why didn't somebody tell me about this 1031 exchange? I just talked to my CPA and I'm going to pay so much tax. So
Mhm.
number one is one of the rules is that you have to have an intermediary. That's what we are, facilitated. So I would get some information from you, get the contract, and connect with your title company
Right.
and set it up.
Okay. So you have to have the intermediary first. And when I sell my house at closing, what happens to those net proceeds?
Well, so the 2 most important things when you're choosing an intermediary is where are they going to put my money?
Mhm.
And can I get a hold of them if I have questions? So the men I worked for have been doing this for a long time, and they have seen a lot of fraud where intermediaries have held the money internally and then invested it. Land America Commonwealth Title comes to mind in 2018. Their
Mhm.
president went to jail due to fraud for 1031 money
Mm.
that was held internally, then internal company. They invested it in the stock market in options during exchange period, and then the market crashed.
Oh,
So
no.
there was about $200 million tied up of exchange money for a good long while. I think it finally got through, but what we do is we work with a couple different financial institutions, i.e. banks. So when we set up an exchange account, we set it up with one of those banks. It's a segregated account strictly for our clients' exchange. And
So it's like an escrow account or some type of fiduciary.
it's
you know,
a cash
account.
account, yeah, with our name on it for benefit of the client. So
Is
if
there any interest being generated at all on that?
Not at this time, the interest rates, we may go back and revisit that if interest rates are going up, but to keep the cost of the exchanges down and the
Mhm.
fact that we hold the money for such a short time and the client would have to pay tax on the interest, we have not gone that direction. We may revisit that in the future.
And by the
Let's
way,
see.
having it sit in cash ain't always a bad thing, okay?
I agree.
It's okay
It is
versus
okay.
in the stock market and it goes poof and it's gone. And those
Exactly.
things can't happen in real life. So, and look at this, guys. She's using her red Solo cup. We won't ask the contents thereof.
No, we won't. I'm on pain pills. I can't do any of that other stuff.
Ah, okay. Just a different type. Okay, got it. So it's important to know who your intermediary is, who you utilize as your financial institutions to hold the capital and those kind of items
Right,
out there.
right.
So at closing, does the title company then send those proceeds to y'all?
To our client's account through us with the bank, yes.
So they don't get it themselves. It goes to
No.
y'all and you hold that in trust for them.
Correct,
Got it. Okay.
correct.
So my deal is now closed. You're holding the money. Now what? What do I do next?
You need to find out what you want to buy. So we will send you paperwork. We've got 2 deadlines that come into play.
Mhm.
The least favorite being the dreaded 45-day to ID rule. So from the date on the settlement statement, the client has 45 calendar days to identify a potential list of replacement properties.
How many
Identified
can
as,
that be?
it can be 1 or 2 or 3 with no cap on the value per property. So you
Mhm.
sell that $600,000 house, you find 2 apartments worth 10 million. You've got the money to do it. You can identify those. Once you go over 3, they put a cap, they put a rule in, a cap, to keep people from putting money down on 30 properties and, you know, messing up the market more than it is. And it's called the 200% rule.
Mhm.
So if you're going to identify, say you're going to identify 5 properties, so more than 3, and you sell for 600, we have to multiply that 600 times 2. So that's 1.2 million. That is
Mhm.
200% of your sale. And then the total purchase price of the 5 properties you identify cannot be greater than 1.2 million.
Okay. So my first 3 can be anything I want.
Any
But once
value.
I go over that, they can't exceed 1.2 million or
The total,
200%.
the sum total purchase price can't exceed 1.2 million.
Got it. Using that for the example. Understand. I didn't know that either. And I understand why they do that. So you just don't throw it out there to buku houses and you go, oh my gosh, what do you do?
Right.
So there is some limitation, but it's not great.
No,
So, but the kicker I just heard though is this 45-day time frame. That means you
correct.
got to, hopefully, what you want to be thinking about is, if you're going to do this, think well in advance. So when you go to contract to sell your property, contact your 1031 administrator, get things ready to go, identify it, and start looking for those other assets if you haven't done it yet. So you've got the time frame between contract and closing of your house, plus the extra 45 days after, to identify, you know, at least a property.
Right.
Hopefully could be 3, could be more based on the rules, so that you actually have something there. Because what happens if you don't identify within that 45 days?
We send your money back and you're on our fee and you pay tax like you would have. There's no penalty for that.
Okay.
What else? What I would say too is you don't have to wait the 45 days to close on a replacement property. So if you were under contract to sell, you were pretty sure it was going to sell, you found something else you wanted to buy, you go under contract. As soon as the money hits your exchange account, you can, I mean, we can close on it 5-10 days after you close on your sale. You don't have to wait.
You know, that's good. But what if you don't? So if you don't identify, you're done. You lost it.
Right. Right.
So it's a drop dead date.
It is,
You gotta do
in
it.
there, yeah, there is no mercy unless it's a federally declared disaster time. So when the hurricane hit New Orleans, we had an extension, and it's county by county. They will identify which counties were affected. The hurricane in Houston a couple years ago, we had an extension there. We did have some COVID extension,
Okay.
but we don't want any more of those.
No, we don't.
We don't want any
So there's
more of those.
some extenuating circumstances, but
Yes.
hard and fast date. Okay.
45
So-
calendar days, and it's not the date of funding. It's the date
Yeah.
on the settlement statement that you closed.
So let's say I'm fortunate and I pick out my 3 potential properties I have to buy,
Yeah.
that I want to buy using this money.
Yep.
Now, do those houses have to be, is there any rule about what those 3 houses are? Can it be less than what I sold? Can it be
It
more than
can.
what I sold?
Yeah, so the reinvestment goal to totally defer the tax is it should be equal or greater than the property you sold minus the closing costs. So if you
So
sold,
go ahead.
no, using the 600,000,
Mhm.
if you have 50,000 of closing costs, then your reinvestment goal is going to be 550. A lot of people think they can take the amount of any note payment out, but you can't. Once that note's paid off, the IRS considers that, rightly or wrongly, but they consider that as first dollar income to you. So yeah, it's basically sales price minus closing costs.
And a closing cost includes any mortgage.
No, it does
No, it
not.
doesn't.
No,
Okay.
it's strictly realtor fees, title fees, exchange
Okay.
fee, all that.
So using the example, I've got $350,000 sitting with you.
Right,
I sold my house for $1 million.
right.
And is it, my question, I guess, is do I have to buy a property or properties equal to $1 million?
$1 million minus your realtor fees, your title fees, all that comes off on the settlement charges.
Yeah, so 900, I have to, so whatever it is I'm buying has to be equal to or greater than $950,000 in that example.
Correct, or add up to that amount.
Yeah.
Your 3 properties could add up to that amount. And
So
if
it
you
doesn't
don't make it, then it doesn't blow up the exchange. That's called boot. So you're going to pay pro rata tax on what you don't spend.
Okay, so let's walk through an example again. So I think it's important just to understand the flow of this. I got the 45-day drop dead date. You can choose 1 or up to 3. You can go beyond that, but there's some rules if you go beyond 3 deals. Got it. You have to buy for your net proceeds at closing, whatever that net is.
Including the mortgage payoff.
Yep. So everything out there. So in the example, 950. Now that 950 can be 1 property, or it could be 2 or 3 added together. But if I don't get there, let's say if I only get to $800,000, I don't get all the way up. Am I then taxed on $100,000?
150. What'd you say your closing costs
Well,
were?
150. Yeah, 150. So I would be taxed on 150, and I'd get 200,000 deferral in that scenario.
Correct. And you want to spend all the cash. Even if you're not going to meet your reinvestment goal, you want to try to spend all that cash that we're holding for you.
Right.
Yeah.
So if I'm buying these properties, I'm using that 350. Can I put a loan on the property?
Oh, yeah.
Through XYZ mortgage company or bank or whatever it might be.
Yeah.
Okay.
Oh, absolutely.
So you take that and do it, but you have to either buy more than 950 in the example, whatever that true net proceeds were, not net, but the gross proceeds less closing costs. If you buy less than what in the example 800,000, and our basis was 950 we're working off of, then I wind up paying tax on the 150.
Correct.
I got it. Okay.
And
you can merge.
You can merge, but we can talk about boots another way. So some people don't want to put all their proceeds in the exchange. If you want to pull some out, and you can do it at closing on, they'll show X amount going to the exchange, X amount cash to seller, then you're going to pay tax on what you pull out, but it's also going to reduce your reinvestment goal by that, whatever amount that you pull out.
Okay. So you don't have to put it all in there.
You don't, but you need to make sense. You need to make sure it still makes sense.
Got it. Understand. Okay. By the way, awesome. Just right. Those are the rules you really need to know because of the 45 days, what you can do. You got to buy for at least in this instance, the 950 proceeds, or you get taxed on whatever you don't use. Got it. All great. So once we do that, I've identified this 1 property, let's say, and I'm going to buy this property for $1 million again.
Okay.
I've got 300, so I'm more than the 950. I've got 350 sitting with you.
Right.
I go get financing for $650,000.
Right.
And then you would wire those dollars to the title company for closing.
Correct.
Got it.
So we work with the title company on both ends. So we'll get with the title company on the sale, and then we'll get with them on the buy, and the client signs off. We don't ever wire any money without the client signing off. We have a 3-fold signature. We sign off, the client signs off, the bank signs off, and we wire the amount that the client tells us to send.
No, that's awesome. That's what it should be, I think, along the way. Now, let's say I'm your client, I'm going through this process. If I'm getting ready to mess up somewhere or miss a deadline or anything, are you calling me, Scott? Yeah, 5 days. Do y'all do that at all?
I'm not calling you, but we're sending you emails.
Okay.
We're sending
But
you
there's-
automated reminders, and you've got the 180 days as well. So the 45 is to identify, but you have to be closed on whatever you're buying within 180 calendar days from the date of the sale.
So I need to be thinking, not just locating my property. I need to be thinking, how am I going to buy that property? And really the big thing is can I buy the property?
Exactly.
So if I have to borrow money for that purpose, can I do it? So if
Exactly.
I'm successful in doing this, using our example, basic long-term, short-term cap gains, I just saved $70,000 in taxes, meaning it's just that much more money I can put into another property.
Correct.
And by the way, Luann, I understand also sometimes these can be some big dollars
Correct.
because, it maybe I don't have a mortgage on my property when I sell it. It's debt-free. And I've got $950,000 of cash to reinvest into another property. By the way, lenders love to see that. That's a big chunk of change going as a down payment against whatever it is you might be buying, down the road there.
Correct.
So once we get past those rules and regulations, what does the client need to be thinking about? What are the other rules and issues that they have to know so they don't stub their toe?
Well, we've talked about most of them. The rule that hangs some people up is about the taxpayer ID. So if let's say it was you that sold that $1 million house and you owned it in your name, you and your wife's name, your social security numbers would be the taxpayer ID, right? So you need to purchase whatever you purchase using your social security numbers.
So I can't do it in a corporate entity.
No,
Has to
you
be under
could
my
do
person-
it. You could do it in a single member disregarded entity, an LLC that had a pass through back to your social, but you can't go, you know what I'm talking about? That
That would be like a sub-S election, more or less, I think.
sub-S smells corporation to me. This would be more of just an LLC that you might want to set up for liability protection, but it doesn't file its own tax return. It passes back through so that if you were ever audited, which is when any of this will ever come into play, and the IRS goes and looks at it, you'd be able to prove that it was the same taxpayer ID on the sale and the purchase. And people get hung up on that.
The bottom line is it has to be somehow under your name. If you originate it in your personal name, your personal social security number, or if you originate it under a corporate entity with a tax ID number, then over here, the entity that buys has to be the same.
Correct.
Almost the same like-kind scenario, but it needs to be the same corporate entity that buys it or you personally buys it. I get that.
And you can buy it tenant in common with some other people. Where I find that we get in discussions is when you have some partners that want to form a new LLC to buy something and use their exchange money, they can't. So what has to happen is the exchange money from you, say you and Susan, we're going to buy something, heaven forbid, right? You would have to buy your portion using your taxpayer ID number. If she was in an LLC, you could come alongside that LLC, but you can't be part of an LLC, which has a totally separate taxpayer ID. Does that make sense?
Yep. So in other words, you have to understand these kind of things so you don't breach the rules. Because as the administrator.
We'll get the title commitment. So we always confirm vesting. We're not going to let you do that. But we'll walk through it before you get to that point.
No, I understand. That's what you guys are there for.
Right.
I know a lot about real estate, about things. I do not know all these little details. And you've got to know the details because the devil is in the details at the end of the day, because if you stub your toe, you got a problem.
Yeah, and we are not going to let you stub your toe on the things that we can control.
No, I got it. I know that we're talking, I'm selling $100,000 house. I've only got 30,000 of profit coming out of it. We're not talking a huge number.
Right.
But if you're on the commercial side of things sometimes, and you're selling a $10 million piece of property and you've got $5 million of proceeds coming out, we're talking some serious cash that you don't want to stub your toe because that could be a big hit along the way. And I think that's so important for everybody to understand. You have to know what you're doing. You have to deal with the right people who will advise you of this,
Right.
along the way.
And we're not
Okay.
allowed to give, CPA advice, but we're allowed to guide. I mean, I can have a general formula where I can help somebody generally figure out what their cost basis is,
Oh,
but then we send
Luann.
them back to their CPA.
Come on. I get asked legal questions, real estate questions, mortgage questions,
I
CPA
know.
questions. And it's like, stop, time out. I
Exactly.
get it. Yeah, we're not allowed to answer that. By the way, the
No.
smart move to make is go back to the horse's mouth. Go to the expert direct, the insurance
Exactly.
expert, the CPA tax
The
expert.
CPA, right? Because they're going to be the
You-
one that are going to sign your tax return. And
Okay.
we do send a closing package in the year following your exchange, which is a summary of when the money came in, where it went, when it went out, that you can give to your CPA. But we do
Good.
not prepare tax forms.
Got it. So from there, I get the 45-day rule. I get the
180.
6 month, 180 day, not 6 months, 180 days.
180
Close.
days, right?
I got the dollar amount rules,
Right,
but you got to buy for the same amount or more. You
right,
can group them together, as you said, the boot,
right.
and take care of that. So and it has to be same social, same tax ID number,
Same
one
tax
way or the
ID,
other
right?
along the way. So once we get all that down, what else can we, stub our toe on? We have to know.
Shouldn't have to stub your toe on, I mean, that's it. There's 7 rules and you've pretty well covered them all. You need to have held the property for longer than a year and a day for it to qualify for long-term capital gains. The IRS differentiates between people who buy properties solely for the purpose of rehab, i.e. flippers. They should not do 1031 exchange. They're taxed short-term capital gains.
Okay. So this is gonna be more in the rental scenario.
Right,
Got it? Whether it's or a buy and hold land type group. A lot of people buying just a warehouse land. I get that too. And I've got all that. So I know that there are some advanced things that you had brought up that I think we should talk about. Now, unfortunately, we can't do mortgages. I got it. I can't do airplanes or yachts or those kind of things. Gone. Darn it. I don't have one to buy or sell, but it'd be fun if I did. We get all those rules. It has to be real estate to real estate only.
correct.
Got it. Okay. Short-term people, no, 1 year and 1 day to get the long-term cap gains. And this is when this kicks in.
Correct.
And you can't really do it beforehand, right? So you
No,
have
the
to have
key,
owned-
well, the key is intent. Okay, it's not going to say in the IRS code, you have to own the property a year and a day. Or some people say 2 years. It's not going to, that's nowhere in the code. The key is intent. So when you bought that property, was your intent to hold it and make money on it? Obviously land, you're not going to rent out land. But I've had a couple of scenarios where somebody has come in off the street and offered my client $500,000 more than what they paid. It was an apartment complex and he'd owned it for 5 months. So
Lucky guy.
yeah, I'll tell you who it was later. What they did is they had the buyer put in the contract. This was an unsolicited offer. This property was not for sale. So it was a calculated risk and he took it. I've not heard that he's, been audited. It's the 1031 exchange are not audit triggers. We do tell people if you're going to pull your equity out of your property, don't do it within 6 months of when you're going to sell it. That is a potential red flag that you're pulling the equity out. That's tax free. And then you're going to sell it and defer the tax. That's a little bit of a red flag for people.
Yeah, no,
for
I
the
get
IRS.
that. And there's a reasonableness. No, my problem with all that is who makes that decision of intent? I think you're
Your
reasonable.
auditor.
Yeah, I think I'm reasonable and I wouldn't trust them as far as I could throw them.
Mhm.
But I get it. You have to be able to try like that up that clause that was put in that contract is great. an unsolicited offer wasn't listed for sale. Things do happen like that. And if you get the
Right.
opportunity, I get that. And hopefully nothing will overcome of that along the way.
Right.
So you made a mention at the very opening that sometimes, because I do a lot of creative finance
Right.
with seller finance properties,
Right.
walk us through one of those. I know that might get in the weeds a little bit, but
It's
what can we
gonna
do on
go,
that?
it's gonna go deep in the weeds. All
Okay.
right, so we're gonna do an example. So you
Okay.
are selling a $300,000 property. And your
Okay.
buyer's gonna put 50,000 down and then you're gonna seller finance the rest, right?
Okay. I'm making
So,
notes as we go.
right, so you cannot receive payment on that seller financing note during the period of the exchange. So we, as the intermediary, are gonna set up that initial note. We're gonna help you. You're gonna set it up, but it's gonna be made payable to Exchange Resource Group for your benefit, okay?
So at the closing table, I'm thinking of an IRA in my head real quick.
Okay,
No, XYZ Trust Company, as you know, for the benefit of Scott Horne.
correct.
Same thing in your world. So when I sell the property to this borrower for $300,000, $50,000 down, you go on the note in the deed of
We
trust.
go on
right?
the initial note, yes,
Okay.
because any payments made during the period before you buy your replacement property has got to be made to us to put in your exchange account.
Okay.
You can't
So
have
when-
control.
I got it. So when you hold that note in your possession, what happens to the $50,000?
50,000 goes into your exchange account
Okay.
at
So the
closing.
cash goes in the account and the
Right.
note goes in your account.
The note goes in your account. The trick is your reinvestment goal to totally defer the tax is still going to be that 300,000 minus any seller paid closing costs.
So I've got to go buy another property for at least 300,000, more or
Correct.
less.
Right.
Got it.
And that note that we're holding for you has got to be paid off before you purchase that replacement property. So
let me
you've
ask
got-
this question.
Go ahead. Yeah.
I love that. I love how you got me there a little bit. So what if I elected to sell the mortgage?
You
Let
could
me
do
give you
that.
let me give you an example. Let's say we have this house that's worth $300,000.
Right.
Let's say I bought it for $210,000.
Okay.
I sell it. I get my $50,000 down and a $250 note from the buyer that you're holding.
Correct.
So I then go sell my note.
Mhm.
Do I have to sell the whole note?
Well, you have to pay off the
The whole
note
thing has
that
to be
we're
paid off.
holding. You have to pay, well, you don't have to pay off the whole thing, but you're going to pay tax on what you don't pay off. So
Okay.
if we're holding a $250,000 note for you and you only pay off 200,000 of it to purchase your replacement property, then you're going to pay tax on the 50,000 that's left.
Okay.
Unless you
So
find
if-
something else.
If I was lucky and I sold my note for $250,000,
Right.
by the way, that's a rarity, but maybe I get lucky.
Right.
And by the way, same time frames, right?
Right.
45 days, 6 months.
Right. Right.
Then that means the 50,000 and the 40,000 between my 210 purchase and my 250 sale is
Right.
all tax deferred.
Correct.
Okay.
I think.
You know what? I may have to sit down with you and walk through this because I do some bifurcation of mortgages where
I
I
have
sell
a
a first.
PDF. I have a PDF that I think I sent you today that one of our attorneys wrote on this. So that might be helpful if we walk through it together.
We can. That'd be great. So other than a traditional sale of real estate, I own property. I'm going to sell property. I make money. I want to go buy more real estate.
Correct.
We went through all that in detail. I got it. I get the owner finance thing a little difficult because the question is you have to find a way to pay off that 250 note. That's the complicated part.
It is.
Now, most people who are in this industry aren't going to have the ability to do that, most likely. There's a
Right,
few people who are sophisticated enough who may be able to do that.
right.
And we'll have to talk about a few of those items out there. And I wish I could read some of the notes popping up. I'm not that good.
Do you want to talk about a reverse exchange? We're kind of,
I want
Run it.
you to talk about all these things because I don't know what the heck you're talking about. So you got to help me.
okay.
What is a
So there
reverse
is-
exchange?
A reverse exchange. So say you had 3 rental properties that you wanted to sell and you wanted to combine, which you can consolidate the funds from more than one exchange to buy something larger. Say you wanted to buy an apartment building. Say you found an apartment building that you wanted to buy before you were able to sell the 3 rental properties.
Okay.
You could not take title to that apartment building before you sell, but we as your intermediary could form an entity, an LLC in the state that you're buying. We would borrow the money from you or from you and a lender. And we would be on the note, the deed of trust, the settlement statement. We would actually take title to that property on your behalf
So you
And-
buy the apartment building,
and lease it back to you.
mhm,
And
which
the-
means my
and-
lender is going to have me signing a personal guarantee somewhere probably.
Oh, yeah, I'm probably putting liens on the properties that you're
Oh, yeah.
selling. Oh, yeah. Yeah, lenders are a little tricky with these. We have found a new one, which I'm pretty excited about.
So you're telling me that I find an apartment I want to buy, then I make a decision to sell another property I own to pull the money out of here to buy this one. But I close the apartment first
We
and
close
I
it
sell,
first.
yes, and then I sell my other property second, and then use these funds to supplant for this
Right,
purchase.
so you have 180 days from the date that we would take title on the apartment to get those properties sold. And then you either pay off the loan, or if we've borrowed cash from you, then you get refunded the cash. Or you make a partial payment on the loan and we flip the exchange back to you so that you become the title holder of record. We are the
there's-
title holder of record during
Yeah,
that exchange period.
right.
Actually, I am in Texas. I'm the power of attorney or agent of record, whatever it is. So I get all kinds
Right.
of crazy mail.
I can only imagine. So I'd have to stop for a moment. So I get the owner finance gig a little bit, and there might be some funky stuff to do internally that might work interestingly, maybe. And then on the reverse that you just described, again, I look at that and I just going, I get it. I understand the premises. So I find what I want to buy first before I actually sell my other property, but I've got to close it. So I arrange to close it, but it goes in your name as the intermediary. I close mine, and then the proceeds I gain here get invested into my apartment that allows me to apply it. So in words, I'm not finding properties after the fact. I found my house before the fact. But I get
Correct.
that.
Yeah, you don't have to worry about the 45 days because we've already identified and purchased the
Yeah.
property.
Yeah.
And it works in the right situations. I'm working on one now where the guy's trying to sell 6 houses. And he's buying an apartment complex with a tenant in common with 2 other people. Odds are he's trying to get them sold, but odds are we're going to end up doing a reverse on that so that he can, buy his part. He's got cash, so we're not going to have a lender with that. But yeah, they're expensive. They're so a traditional for us, a traditional exchange, if it's less than $1 million, we're going to charge $950 for the work on the sale and one buy, and then $250 each additional purchase. The reverse exchanges are going to start around $5,000 with $1,000 security deposit plus a $950 fee on the sales, because they're a lot of work. But if you're looking at $100,000 worth of tax liability, it's a drop in the bucket. So it does make sense.
I agree. It's
Yeah.
kind of like working with, let's say, a Roth IRA of some format and whatnot, where you can save and defer those taxes or eliminate them as well down the road. it's all about saving money. It's not just always about making money. It's about learning how to save money.
How
And a
much you walk
1031
away in your pocket. It's how much you
Yep.
keep that counts. That's what my boss would say. It's not how
And
much
so long
you
as we
make.
don't
it's-
die, we're okay. Okay, I
Or
got it.
slip-
So is there, before I cut you loose, is there anything else from a funky out of the box gig that you want to share with us, or is that pretty much it?
Well, real quick, combining the primary and the investment property.
Mhm.
If you've got $1 million gain on a primary residence,
Mhm.
and you can exclude the first 500,000, what you could do is move out of your primary residence and lease it out for a year and a day and make it an investment property.
Okay.
Then you could sell it. You could do an exchange. You could take your $500,000 Section 121 exclusion. You could put the rest in the exchange. You buy another investment property. You keep it for investment for a year, and then you can move in it and you can make it your primary residence.
All about
So-
the intent again, right?
Well, the intent and what some people do that for a living. They'll buy investment, they'll go primary, they'll live in it, then they'll just keep on moving like that. So
If you want to move every 2 years, you can do that, I guess, right?
I've been in this house 34 years. I ain't going anywhere.
I don't blame you. That'd be a headache. So Luann, first off, I've always known basics of a 1031.
Right.
I did not know some of the things you have brought up, which is to me intriguing, and it's something to always be thinking about. And in the investment game, I always teach people making money. It's not just always about making money. It's not about the cost of money, but it's learning how to save money, as we said earlier,
Right.
and how much you can walk away with. And if I have the choice of not paying the government versus paying the government, that's a foregone conclusion right there. And I
It
think we
is.
all want to do that. Now, we can't always do it, and I get it, but sometimes you can. Right place, right time. And it's thinking ahead the game and knowing what is available. So, Luann, I know you got a hard stop. You got to go. So
Do
tell
you want my
everybody.
phone number? Do you
I
want my
want
phone
you to
number?
tell them your address, your phone number, your shoe size, your email address, everything. Hit it out there.
Okay. Phone number is for Dallas for my company is 972-863-1031. No coincidence here. So 972-863-1031. My email is Luann, LUANN at @ERG. So E Edgar R Robert G George 1031.com. And I have a Facebook page. I think you're in it, Scott. It's called 1031 Exchange Assistance. Got about 2,400 members in it right now. And it's strictly for posting questions. I delete people who are trying to sell things or advertise. But
Yep.
if you want to send me a request to join, I will gladly add you.
Yeah, there's just, I sit here and I listen to this, and there's so many, like in my creative finance world, I think it's easy today, but I've been doing it forever. And if you're coming outside looking in, you're going, oh my gosh, it's daunting. You go into a 1031, there are a lot of rules and regulations. There's some big penalties if you screw up. Hey, you got to pay the tax, which we don't want to do, and things of that nature. And it's always getting with the right people. And, I've known you forever, I think. I don't know how far we go back, 20 plus years, maybe more. I don't know. So that's awesome along the way. I've seen you out in all the club meetings and good. So guys, if you're considering doing a 1031, take a moment, reach out to Luann, give her a call, ask her questions, check out her Facebook site, check out their website, give them a call. Luann.
Buddy. All right. Bye-bye.
Bye, Luann.